Hello and welcome to Scrolling with Ceazor. Today is August 12th, 2026. Okay, I got a lot of news for you, stuff about meme coins, about the Ethereum improvement proposal, and a couple little specific little protocol stuff. So before I get into the news, let's take a quick look at the charts. But as always, this is not financial advice. Just do what you got to do. ETH pumped a little bit today, and it's back down on that pump. So yeah, most of crypto's around 0.5% up. Gold is kind of sitting at 0.5% up as well. Sonic is down almost 1.5%. Hype is up 3%. Nice little pump for Hype. And then taking a look at my liquidity positions. So the S&P is bouncing around at all-time high, which I'm not in range. Meta dumped quite a bit, so back to below my entry point, which kind of sucks, but there is trading fees there, so that's good. Google continues to go down, so I did open a position yesterday around here, so I've bought in some more Google here for this position. I think it's a pretty good buy. I'm hoping it'll bounce at this low here around 335, 336. Tesla is bouncing around in range, and I did notice this SpaceX is pumping like crazy. This is acting like a meme coin. I'm afraid to put liquidity on this because it's so volatile. Like, look at how big these candles are. Like, this one went from this one day went from 115 to like 132 in a single day of trading. So I think it's going to be quite volatile. It's trading like a meme coin almost, and an obvious pump and dumper, so pre-sellers, and then the market comes in, tries to join, and then everybody's selling and then buying back their at much lower prices than the IPO here. So anyways, let's move on to the news of the... Oh, well, look at this. Uranus up 6%. Oh, okay. Well, that's pretty good, I guess. Yeah, so let's move over to the tweets of the day and kind of get through. So this is the first one here. Hannibal here. Hannibal, whatever. He's kind of just... I don't want to read it all, but basically the Ethereum Foundation, or this guy Trent, is basically saying, the feedback's that people don't want this EIP. They're wrong, or they're like what they say here, AI sock puppets. Like, yes, of course, you have to take into account that we have AI now, and people are spinning up these AI reply guys like crazy. It's really hard to tell if they're AI or not now. It's kind of sucky. There needs to be a way to kind of maybe some sort of human verification. I don't know. I don't know. I don't want to do KYC into Ethereum governance, of course, but I don't know. So like, it's a legitimate problem that debates are getting flooded with AI bots, which sucks, right? But I still think everybody who I know is actually a human being doesn't like the idea of this EIP. So I don't know. So I think maybe more people need to go on who have the ability to speak on this, need to go out and speak for the rest of everybody, like in the sort of like a politician type ideal. We need this. So that's it for that. Let's move on. So Liquidity. This is a great little like TLDR on why I really love Liquidity Protocol, the bold stablecoin. So every stablecoin freeze is a reminder to back decentralized stablecoins. They make Ethereum stronger, more ETH locked as collateral, more censorship resistance, 15 billion on-chain demand if decentralized shares only goes from 0.5 to 5%. Hold stables that back Ethereum, hold bold. So yeah, Ethereum is still the best blockchain out there as far as I'm concerned. It's still the most censorship resistance, the most decentralized, and so protocols that actually support it like this, that give utility to ETH, are important. But also, wait until some people start getting their actual stablecoins frozen because, their wife is suing them for infidelity or something like this. Like wait until that starts happening, and then you'll see the power of being like having an unfreezable stablecoin that's not controlled by a centralized entity. Moving on, so Flex Meow dropped a V2, okay, and V2 changes quite a bit in, but it doesn't, like it says here, so big functionality changes for small code changes. So they just changed a little bit of the code and redeployed the markets. So you can't open new ones, the old ones, but you can open the new ones now. So there's a few things here. So swapless redemptions, and here it explains what they do. Basically, they can allow collateral that is locked because it doesn't require a swap to redeem. Then upfront fees to lockers instead of lenders. This is significant. So before, like when you open a position, you have to pay an upfront fee, right? And that upfront fee would just boost the APR of the lenders. But now the lenders don't get that upfront fee, and it goes to a contract that will have token staking. So obviously Flex Meow is going to drop a Flex token, and if you lock that Flex token, you will get some of these upfront. You will get your share of these upfront fees. So that's kind of alpha that's hidden in here based in this message. I don't know. I'm assuming a little bit. But the other thing here is that the upfront fees have been reduced significantly, though. So before you were forced to pay 7 days of upfront fees, and now it's reduced down to 1 day. So it's very significant. So that means if you do a loop on there, it takes hours or maybe 1 day at most to recuperate your upfront fee, and then you're into profit. Whereas before, sometimes it was getting around 3 or 4 days to recuperate your upfront fee, and then you don't want to loop because you're like, someone might redeem you in that time. So anyhow, so that's happening. So let's move on to Polaris. Polaris is another place that's going to have ETH put to work, so you can deposit your ETH for PETH. Be careful when you do this because it's on a bonding curve, and if lots and lots of people do it, the market price versus the floor price of PETH will change. I did a video on it. You can watch the video, fully understand how Polaris works. But the point is, that's enough. You put ETH into your PETH. If you do it at the right time, then you're going to get APR. The floor price of PETH is constantly rising based on the system. Again, watch the video and you'll understand where it all comes from, right? However, there are some other opportunities. You can take that PETH and you can split it into floor price PETH and volatile PETH, and then you can use that floor to borrow ETH and put it somewhere else. So you can deposit your ETH in here, get PETH, use your floor price to borrow your ETH back, and then put that ETH into like wherever is beating the borrow APR. So it's great or you could loop it, right? You could also take the PETH and convert it one way into Polar. So this is a one-way conversion. You can't convert back. You'd have to try to sell it, the Polar, if you want it out of it. Yeah, and then, or you can use that PETH to mint some gold or USD and then put those into a vault and earn those. Okay, so, or even sell them for USDC or whatever shitcoin whatever shit stablecoin you want, or into Bold or something like that, and put that to work, right? So yeah, so that's it for that. Let's move on. So Andy here is talking about Fraxnet. I'm going to read exactly what he says because it's pretty cool. Fraxnet will be especially useful in the future. He says every consumer brand will launch some sort of digital dollar. So Walmart dollar, Amazon coin, Winn-Dixie. I don't even know what Winn-Dixie is. It's all possible. Then think about integrating those loyalty dollars in stablecoins that we know today, as well as fiat rails. Sounds complex. Fraxnet enables native transfers through the world. So Fraxnet is going to be able to like completely connect the TradFi world. All these little companies that want to do like points, and they want to have that like that narrative of, oh, our points are on chain, and they can use Fraxnet to not have to have a specialized team to manage their blockchain token, right? They can just kind of go to Fraxnet, and Fraxnet will manage that for them. Okay, so that's what I'm getting from that. So this chick here says, "Oh, I'm here to bring meme coins back." So you always notice like this girl's obviously a paid shill of some sort. Maybe she's not. Maybe she's a meme coin trader and she really believes in them. But they're garbage. And how come it always has to be some like attractive girl, like, you know, talking about fucking meme coins, right? But anyway, so this girl says, well, why don't you go back to the kitchen, retard? So that's a bit sexist. But anyways, you know, she shouldn't be shilling meme coins. Moving on, here's a fantastic thread here. You can go through it. I'm not going to read through it all, but it's a fantastic thread. Basically, like, meme coins are trash, and you got to be careful. You are the exit liquidity. There's quite a bit here. Like, let me show you a good example of it. It says, in the first 5 days, 4% of the wallets took 65% of all the positive. So all the profit went, 65% of the profit went to 4% of the wallets from the Uniswap launchpad. Where's the other good part? By design. So you don't get any allocation, but you can then, in the same transaction, you can buy the token, and 40% of the launches do that, and 60% of those dump 100% of those tokens in the first 5 minutes. So yeah, you just go through and read through all of this and get a good taste of why, if you really need to be convinced to stay away from meme coins. Mark Zeller here says significant. He retweets this and says some significant stuff. Meme coins are a slaughterhouse, and if you're supporting them directly or indirectly, you're both a sociopath and short-sighted. So yeah, like I did a tweet a long time ago where I said, like, you can be profitable in crypto without sacrificing your morals. Like, it's like, why? Like, if you don't have to like invest in like cigarette companies, right? If you're against cigarette companies, you don't invest in them, even though you're like, they're going to be profitable. Everyone's hooked on cigarettes, right? Or like Zinth or whatever it is you feel is wrong or bad for humans, for human society. Don't invest in those companies just because they have a lot of like drug addicts, right? So that's basically what he's saying. Just don't go, oh, I just won't trade the meme coins on Pump, but I'll buy Pump coin the Pump coin because they're generating revenue and so forth. Like, just try to, look yourself in the mirror, I would say. Moving on. So Silo V3, I did a video on this a long time ago. It's out. It's pretty interesting because like, there's a big problem with like RWAs in that they can't be liquidated because there's not enough like DEX liquidity. So it's difficult to liquidate these RWAs because the RWA doesn't care about liquidity. It's a real world asset. It already has liquidity like in the stocks and stuff like that. So they're more difficult to liquidate, right? But with Silo V3, they can liquidate it because the person who liquidates, instead of how does it work again? When it's liquidated, the lender gets the collateral. So when you lend on V3, Silo V3, you need to be careful about the collateral more because even liquidations are basically going to hand you that RWA instead of, liquidating and giving you your USDC back. So you got to be a little more careful. However, it's a benefit because the system itself is able to support RWAs. Okay, moving on to this. So Yearn Finance has this thing. A lot of protocols do this now, but this is pretty cool. Okay, so they have this tool, APR Oracle, that you can kind of go to this and you can select the vault and you're like, oh, I'm thinking about depositing $1 million into this vault. Now you're going to dilute the APR and reduce the APR because you've just done that, right? So this APR Oracle is going to assess what your impact is going to be on the APR. And I think that's pretty significant and useful. Because, you know, especially for whales who are going to deposit large sums of money, if you're depositing $100,000, even $10,000, you probably don't need to worry about this. But if you're depositing a huge amount of money, then you can do that. Now, if you like my stuff, if you like what I've been doing over the years and you want to support me, you can go to my secretsandwich.xyz and you click on Volts, and then here is the Yearn Volts page. You can deposit into Yearn Volts via this page. Basically, all this is doing is sending your money through my website, so it's just a front end for you for Yearn. It's deposit. I don't have any smart contracts built around this. It's just you deposit, and it just literally goes straight into Yearn Volts, and you get back your Yearn token, and then you can go to Yearn to withdraw, or you can withdraw here if you want. But depositing through here is the key point. And after you deposit through there, it says here, then Yearn will split any performance fees they are already taking. They will split them with me to give me a small little juice, a bit of juice. It's not a lot, but it does add up over time. And you can, if you want to more details about what's going on here, you can click on the view on Yearn, and it'll take you directly to that page, and you can check the assessments of the risk and all of the assessment stuff and the strategies and where things are going for on that Yearn website. Okay, next one. Pendle has this ecosystem, so Pendle Ecosystem USDC. Now, I thought it's pretty interesting, and I do want to look at it. It's curated by Pendle and Armitage Wintermute Volt Curation Arm. So you deposit USDC, you earn yield from PT borrow demand, plus share of 7,500 pendles weekly. So check it out. Obviously you want to check what you're exposed to here, which PTs you're exposed to. So people are minting PTs and they're using those as collateral to borrow your USDC, and it's boosted with Pendle, and these collaterals are curated by several entities. So I think it's worth checking out. I haven't checked it out deeply, but yeah, I thought I would share it. Opicalus Cage did this. So Kaido, as you can see, an insider pump and dump. So yeah, a lot of people bought here, and then here's where they announced that they've got this new thing with a integration with or like some sort of X private feed, and the thing went crazy, and then tons of dumping, right? So yeah, insider trading pretty clearly. Last thing here is we've got this long thread by this guy Min. I don't know who this is. So he's talking about Sonic, right? And he's got a lot of little points in here. I will point at a few of them, and then that'll be the last thing. So he's like many S community members. He was initially skeptical. So because we've got this new Matt Visor CEO, and he came out and said, "I'm going to take over, and I'm going to be in control of everything." And everyone's skeptical because it's tough, right? But then they dropped this 50-day thread. I've talked about this in the past, and you can see that a lot of things are changing and happening. So you can go through all of this and kind of see why he thinks this is good. But let's finish with Matt also wrote, as the business unit described above starts producing revenue, we can point to the mechanism for how that reaches S holders, gets designed and published. Okay, so they're trying to build an ecosystem that is sustainable and has good DeFi built stuff, and then as that starts generating revenue, then you will see those effects on Sonic token. I have Sonic tokens. I'm biased as hell on this, so I'm hoping it'll pump, but I do like Sonic. It is a good chain. The user experience is fantastic. It's just there's not a lot built there, and there's not a lot of traffic right now. Anyhow, so that's it for today. I hope this has been useful and interesting, and thank you so much for listening, and goodbye.